And now to our first conversation. Decentralized finance, also known as DeFi, has come a long way from being a term only known to tech insiders. Though still in early stages of development, DeFi is said to have potential to open the door to a new industry within the African financial ecosystem. Well, to discuss issues in DeFi and adoption outlook, we have Timisa Agbajo, a DeFi analyst with Kudi Financials, joining us right here on Business Morning. Great to have you.
Great to be here. Good morning.
Good morning. So banks are increasingly recognizing DeFi industry as a key disruptor, in their operating environment and as an opportunity. How do you see this?
I mean, it is if banks decide to take advantage of it. DeFi is built on smart contracts. The basics of finance still remains lending and borrowing. It doesn't matter how intricately structured these financial products are. At the base of it, the bank's business is to lend out money and then to make interest on the money being lent out. So DeFi removes all the intermediaries whereby you are interacting with the smart contract directly. So you supplying the yield, you get to directly profit from supplying money to them. And people borrowing as well, they get to enjoy these products without having to meet or interact with anybody. All you need to begin your journey with DeFi is to have a non-custodial wallet like a MetaMask or a Brave browser or a Phantom browser. So these are the things that banks need to look into, because right now banks are still operating out of a brick and mortar structure. You would need to go into a bank, set up your account. You would need to give them valid identification. There are so many processes required to start doing business or start transacting. And even when you do create a bank account, it's not so easy for you to get a loan without any previous structure or, let's say, being a salary earner. So as of right now, it's still very young, it's still very new, and a lot of people don't understand it. But by the time companies and future developers are able to abstract away the blockchain layer, where it's just you interacting with the application, for example, or the product, and your money comes out, your money goes in, your interest is being earned, the loan that you took out, the interest has been taken from it without having to speak with anybody, without having to deal with anybody. So these are the things that will definitely be finance of the future. So
Quite
it's a case of, a case of banks needing to participate.
Yeah, and the decentralized finance, is supposed to be decentralized, but are there really fully, decentralized, platforms? Because it seems there's always going to be some kind of central figure, even though it's, DeFi.
Okay, so how it mostly happens is you have the creators of projects, you have people that build their protocols, and then along the line, they start seeding power towards the users. So that's when you now end up having things called governance tokens. You get for platforms like Aave and Compound now. That's when you get things like governance tokens or even Convex. So these governance tokens give you a chance to vote on the direction that the protocol is going to take. So people can submit improvement plans, and then people within the community get to vote on if or not it happens. So the way it works is you build it, you start it, but along the line, you eventually want to seek power and leave it to run as a smart contract that it is, because the point of failure is still the human beings. So leaving it decentralized is the key. It might start off being centralized, but often more than not, an airdrop happens, distribution happens, and then the development team slowly releases power towards the community.
Quite interesting. But what would you say are the key differences, between, DeFi and traditional finance? Is it complementary, or is it just a competition at this point?
It's not competition yet, but it's definitely competition that is going to happen, because decentralized finance doesn't need a brick and mortar building. They don't need a CEO. You just need to have a wallet to plug in. Banks still need to deal with regulations. They need to deal with KYC. They need to deal with a lot of things. They need to deal with a lot of things that decentralized finance does not need to. It doesn't mean that there are no problems with DeFi, because there is regulatory problems rather. But I mean, the key difference is basically there is no restriction. You can access Compound from anywhere in the world, as far as it's not restricted as far as crypto is not banned in that country. You could participate from wherever. They don't need to know your name to give you a loan. You submit your assets, and these things just happen. It's seamless. It's a seamless transaction.
Yeah, and with the war in Ukraine, we've seen the West hammer financial sanctions on Russia, limiting the ability to make international payments. And now we see Russia looking, seriously into central bank digital currencies. How do CBDCs play into DeFi?
So again, from the name, central bank denominated currency, and then decentralized finance. So there is still a solid disconnect. So what works with DeFi now is we have protocols like you have stable coins like USDC, USDT, BUSD, and then we have companies like Paxos, we have companies like Merit Circle. These are companies that will tell you that they will redeem your stable coins for the dollar. So there is direct backing for it. And at every point in time, you can see the market cap of these tokens. You can know how much USDC is in circulation. And then when they do an audit of Merit Circle, you would see that, okay, they have $47 billion because there's 47 billion USDC in crypto right now, and vice versa for BUSD and Paxos. So CBDCs coming to DeFi will mean that central banks will no longer be able to print money continuously, because at certain points they will need to ask you, okay, so what is backing this? And then we now go into the long talk about inflation and arbitrary printing of money and monetary policies. So CBDCs in DeFi, I am not seeing it happen right now, but I mean, there's always chance for the future to change.
Right, and we saw what happened with that stable coin that lost its peg to the US dollar. Talking about Luna, how much of a threat is that to DeFi at this point?
So beautifully, losing $14 billion is not a threat to DeFi because everybody's still standing. The markets have not crashed. People that were holding their Bitcoin are still holding their Bitcoin. People holding Ethereum are still holding Ethereum. But Luna is gone. Okay, fine. Algorithmic stablecoin no longer exists. What next? What are we going to do? And that is exactly the point of decentralized finance. You want a system that is anti-fragile. You don't want one person's policies to come and ruin everything that you are doing. It shouldn't be a case of just because one person made a decision, then millions of people have to suffer. I mean, Lunar USD was a bad thing, but this is an industry that is barely 10 years old. This is a protocol that was about 2 years old. Yes, it's a lot of money that's gone, and yes, a lot of people are sad about it, but the system is working the way it was designed to work. There is nobody stepping in to suddenly give a larger payout to the Lunar company because they were too big to fail. So that statement doesn't exist. $40 billion is a lot of money, but yet it's not deemed too big to fail. If it's not good, it's not good.
Right, and we'll see how that impacts, other stable coins, going forward, even though that was some kind of experiment. But still talking about central bank digital currencies, how much of a threat is that to the US dollar's dominance as the world's currency?
As of right now, there is zero threat to the US dollar as a currency, even in crypto generally. Stable coins have one of the largest market share, and the stable coins are denominated in the US dollar. There is no other currency worldwide that is a reserve currency. So unless that changes anytime soon, that's when we'll now start saying that something is a threat to the dollar. I mean, the long-term play that most Bitcoin believers will say is that Bitcoin will become the new denominated reserve currency. And I mean, it's still up for a lot of discussion because of the price and the volatility of Bitcoin. I mean, when we get to the point where Bitcoin price changes moves in the 0.5% like stock markets and the 0.1%, that's when we can now start having conversation about things being a threat to the US dollar. But everybody's doing trade in the US dollar. Everybody's going to collect the US dollar. I'm not seeing any country being able to impose sanctions on the US and they'll be successful with it, unlike what they're doing with Russia currently. So as long as they are still the America that we know and that we love, then I don't see anything happening to them from CBDCs or DeFi.
Right. But, most countries have regulation that seem to, stifle DeFi, and, most companies use DeFi in operations, at this point. How does it work, in the face of regulatory uncertainties?
So I will say that regulatory bodies coming into or having regulations at all is a good step. because it means that a conversation is willing to be had. I mean, that's the major thing. The conversation is willing to be had. So the more the governments that be understand it, and the more that the people here, because the people are the government, and if the people understand it and the people want it, then they will pass the proper regulations. It's only when you refuse to see the upside from what decentralized finance and cryptocurrencies as a whole can offer that you would still have how do I call it now, archaic policies against them. I mean, yes, regulation is always required and regulation is always needed, but this is something that needs to come from both parties, the users, which is everybody participating that know how these things work, and then the governments that are looking in from the outside and want to say, okay, how best can we make this thing more appealing to the general public? The more people that use decentralized finance, the more crypto, the more access, the more banking the unbanked, for lack of a better word, the word that everybody seems to use all the time when they're starting a new fintech application. Oh, I'm going to bank the unbanked. But when these people open a bank account, they're not going to get loans from you. They're not going to be able to scale their business. They're going to need to prove that they're salary earners before most major institutions will give them loans, even the ones that claim to be there for SMEs or so. I know how hard it is for business owners to get loans these days. But in decentralized finance, you have an asset. You could put your Bitcoin, collect a 20% loan against your collateral. You never need to sell the asset. You do the business that you need to do. You're paying negligible rates on the Bitcoin that is your digital asset. And by the time you've done your business, you come back, you pay off your loan. Or if the gods are on your side and Bitcoin price has doubled since then, you sell off a bit of that Bitcoin and sell the loan. So it's actually creating that credit society, that use of money that people should be able to understand better.
And I've also noticed with DeFi too, the collateral seems to be, quite high, because they don't have, most of the information. But, with how much is required for you to actually get a loan in DeFi, it seems you need to have a lot of money in there to be able to get these loans.
No, and that is the beautiful thing about it. Not really. So there is something called flash loans, and we have protocols that do under collateralized lending. These are things that you will not see in any traditional finance place. So flash loans happen where you take the loan from the protocol and then you use it to perform transactions, and that same amount is returned in the same instance. So this is things that people that understand the space intricately get to use for things like arbitrage. You understand? People perform $200 million arbitrage with 0 naira, 0 kobo in their accounts, and they end up making a profit of maybe $131,000 from intricately understanding the code, understanding how to take advantage of these things that are possible. So yes, you do need some collateral, but it's not everywhere. And you start small. Most people that come to take a loan will tell you, oh, I already have XYZ. We're also getting into the point where NFTs are being created, and then they're assigned to real world assets. These real world assets now are slowly finding a market whereby they can be collateralized. So these are the products that need to be built on decentralized finance. I mean, right now we're still on lending and borrowing, but the further we go along, where you have people that can do independent assessments and other things that just give value to assets that you should be able to take loans against, the easier it gets. You mint an NFT of your cars, and as collateral, you put stuff, your car is worth 3.4 million. It's been verified by an independent accreditor that yes, car is worth 3.4 million. You take a loan against it for 1.2 million. It happens.
Quite interesting. Quite interesting. Right, and we've seen the SEC in Nigeria, come up with some guidelines, to digital currencies, in Nigeria. What conversations, are being had, at this point after the guidelines were released?
So the conversations that are being had at this point is that it's a good thing. We have somewhere to start from. There is a place to start the conversation from. So it's now left for the stakeholders, the exchange owners, the people that want to create tokens from Nigeria, people that are trying to bring people into the markets, to now have conversations with the SEC. And I like it. I like that the SEC has taken time to create these regulations, because we're in a country where people are always chasing the next 20% per month. And once people introduce that kind of Ponzi behavior into the cryptocurrency space, it becomes a free-for-all. And yes, investors will get burned because people do not read the terms and conditions. A lot of people do not read the terms and conditions. So these guidelines coming out, yes, there are a lot of things that are still a bit fresh, and maybe the SEC has not fully taking into cognizance the end users and how this thing will play out. But it's a welcome conversation because now you can bring more people into the safe space, and when the people come in, they get to see, they get to understand, and then they get to apply themselves as well.
Quite, and understanding is very important in that space because everything there is quite techy, and not everybody will understand all of that. But what's your outlook, for the DeFi adoption, in Nigeria and Africa going forward? What do you see, say, in the next 5 years?
In the next 5 years, more people will have MetaMask wallets, more people will have decentralized loans. A lot of people will probably be taking out loans to pay their rent with the Bitcoin that they have in cold storage or the Bitcoin that they've been holding for a really long time. Technology grows in exponents, and we're thankful for that. If it was a linear thing, I would be saying, oh, it take about 20 years. Look at banking 10 years ago and look at banking now. So now look at how much technology is being used for these things. And the younger generation, they have a grasp of it. A lot of things happen in Discord, a lot of things are happening on Twitter. And these are spaces where the younger generation gets to understand. And the more people being taught about these things, the easier it is for adoption to happen. So in 5 years' time, I believe even you'd be having a decentralized finance loan just for the sake of it.
Just for the sake of it. Well, we'll keep watching that space. Very interesting space that's truly growing exponentially. Thank you so much, Temisa Agbajo, DeFi analyst with Kudi Financials. Thank you so much for coming on the program.
Thank you very much for having me, Ladi.
All right. So after the break, FX Commodities update is next. Do stay with us. This is Business Morning.